Hey, Webby Trades! I want to do a video analysis update on some stocks that institutions bought unusual options on this Thursday, right before our major quad witching date tomorrow, and thus the rotation and the quarterly calendar change for the third quarter, which is going to be very exciting. We're going to see big changes in the market, hopefully some new leaders in the market. So we're going to go over what some of those stocks are. First, the method to the madness. Let's look at some ETFs, unusual options volume for FXA, the Australian dollar. We're going to focus on a little more fun one right here, the ARKG Revolution ETF. So let's see what they bought, or let's see at first what the unusual options volume statistics were. We see a pretty massive position is actually taken to the downside on ARKG. Let's see. So are they buying married puts on ARKG at a super cycle low? What would that entail? That would be quite interesting, because a lot of people, they're going to see this. Look at these deep in the money puts that they bought for the front month expiration. What are they really doing here? In my opinion, they're going to exercise these puts, and they have built themselves a delta neutral position. They're going to, but what we can't see right here is that with each of these puts, if we look at the delta equivalency, negative 71 shares per contract, and negative 67 shares per contract, we're going to see that they take these positions against these. They're going to buy as many shares as the delta equivalency. At least that's what I believe is happening. So they're going to exercise these positions, and then we're going to see a large kind of shift, I believe, in this sector. I've talked a lot of biotech stocks. I've talked a lot about them. But this one is a little different than traditional biotech. It's really focusing on the genomic revolution. So we're going to look at some Elliot wave voodoo right now. First, let's look at these time fibs. Subdividing this right here, we see that if we take this small degree wave 1 and we connect its beginning with its high, it gives a very kind of uncanny looking 3-month time fib right here, where it could potentially have been the bottom for ARKG. So we'll keep looking at this subdivision. I think it's a 3 with this wick right here and a wave 4. It could also be that this is wave 3 and this is wave 4. The outcome, I believe, at this stage is going to be the same. 1, 2, 3, 4, 5 waves ended. A large wave 1, wave A. I don't believe institutions are trying to game with all those options and all that money spent. I don't think they're trying to game a big crash in ARKG tomorrow. I think what they're trying to do is build a delta neutral position going into next week, and they're buying as many shares as they can against those puts based on the delta equivalency. And of course, the delta might be more accurate just looking at them on the options chain. Bar chart might be a little different than the actual delta that they have. But looking at this, I think this is going to be a 3-month time fib on the monthly time frame. It's going to bottom at the 3. I'm expecting a bull into this 5-month time fib for a large wave 3, wave C. If we look at this, that's January of 2029, and it wouldn't be. It would kind of look a little Roaring 20s-esque to see a small cap, kind of very growthy ETF like this go up and have a rally into the beginning of 2029. Is it even sane to try to forecast out that far? That's kind of what Elliott wave theorists do. It's kind of just part of the game. And I've shown with a extremely remarkable and uncanny track record that there's an awful lot of merit in doing this. So I try to keep some of the zany stuff and the voodoo out, but there are some times when it simply can't be done. I think this is an A, B, C correction at the 161.8% extension. So A, B, C, right at the 161.8% fib. This low right here is going to be a tight invalidation of 21.97. Realistically, it's a little too tight. But I think that's just how this ETF is going to be. They're going to make a bottom for this super cycle low quite difficult. They're going to really make retail work for it. And even just within this low, I think there's a chance they're looking for A, B, see from this high, right at the 161.8% extension again. Is it worth a shot? I think the MMs know that it is, and other stocks like Moderna, Novavax, and Pfizer, we'll see if that ever gets going. But it's paying dividends until it does. Support this idea. I've talked about a lot of biotech stocks. I really want to focus on the gene therapy stocks since this is kind of a specific ETF. And we all remember what happened the last time gene therapy rallied substantially. So, maybe it's just going to be rate cuts this time, right? I'm sure that's probably the safe bet. It's just going to be rate cuts, nothing to worry about, right? That's the smart way to go about it. This is a large 1-2 big wave 3 and a wave 4. I'm sure if Zoom and Asana get rallying, Smart Sheet, the stay-at-home stocks, the cybersecurity stocks like Okta, it's just going to be because of rate cuts. So this is a large wave 1 and an ABC wave 2 for ARKG. And this is an ABC correction. And I think from this low, this is another wave 1 and another wave 2. So I am looking for a wave 3 of wave 3 to begin. I suspect they're using this deep in the money put position expiring tomorrow to build a delta neutral position by buying shares against those puts based on the delta equivalency. That's called a married put. Let's look at Carmax for a second. It's got earnings tomorrow before the market, so a lot of people really don't like, and really I don't like, if I see a stock on the strangle screen or unusual option screen, then I see it has earnings tomorrow, the very next day before market. I mean, in this case, I'm gonna have to wait. But looking at, and I'm not saying I'm gonna buy Carmax, but looking at the strangle screen, we see Carmax make a reading, and it was actually making a lot of readings on the screen. Let's see if it was on the straddle screen too. But it has 100% IV rank. That means options are the most expensive that they've been in the past year. Starbucks, I thought that was very interesting. I've talked about Starbucks recently. We'll give it a quick shot looking at in a refresh of Starbucks. But let's look right here at Carmax on the strangle screen. I'll do Starbucks real quick because I think Starbucks is doing a pretty good thing going into the third quarter as well, and it's also on the strangle screen. If we look, 1, 2, 3, 4, 5, wave 1, ABC wave 2, and then from this low, 1, 2, 3, 4, 5, wave 1. I believe an ABC correction ended wave 2 at the 78.6% retracement and also the 127.2% extension of the length of wave A placed of the wave B high. So I think we are going to see that that's what Starbucks is doing. 68.54 was the invalidation. A little tighter. I think 74.45 is going to hold as well, but 68.54 is going to remain this really important wave 1, wave 2, wave 3 invalidation. Let's go right back to Carmax for a sec. It's got earnings tomorrow. It's got really expensive options. So why are institutions buying strangles on it? Well, maybe they're gambling, right? Maybe they're just gambling. I'm sure that's a safe thing to bet. So we're gonna look at Carmax. Why are they buying strangles on Carmax? Well, if we look at it, I think that this is a really chance for Elliot Wave to shine here because this is a pretty clean leading diagonal. I want to explain these time fibs. I'm taking the beginning of wave 1, connecting it with the high of wave 1, and we see the 8-month time fib, the 8-week time fib, I should say, is right, I believe, where a super important bottom has been put in. And so we're going to see that this 13-month time frame, I'll just get into it, is going to be where this weekly cycle ends. So again, predicting years out, right there, March of 2026. Look out March of 2026 for the Carmax top before it corrects into wave 4. Let's subdivide this for a little bit. 1, 2, 3, 4, 5. Large wave 1, wave A. Wave 2, wave B ends here. So I'm looking for wave 3 and wave C to begin. This is an A, B, C correction. 1, 2, 3, 4. And then notice we make another high. We make another high. So this is at least 1, 2, 3, 4, 5 waves. In the bigger picture, that's Elliott wave confirmation of this larger degree count. Subdividing this is gonna be a little arbitrary, but it's gonna be I'm gonna do my best. I think the cleanest way, the most accurate way I should say, is that this is yes another leading diagonal, and it's just not very pretty, but it would fit the description of a leading diagonal. 1, 2, 3, 4, 5 waves. So I think this is the best. But from this low, it could also be wave 1, wave 2, and then there's just a really, where's the small degree? 1, 2, 3, 4, 5. I can't see it. 1, 2, 3, 4, 5. I can't really see that. So I think that the leading diagonal from this low is the best count. So we'll see if Carmax, let's see what happens with earnings. I'm not going to rush into take a position in Carmax, but this is kind of nice to see for the auto sector, the ailing auto sector. When will that ever recover? To be honest, the Elliott waves for the airlines and the auto sector, they're all very similar, and they're all pretty clean counts. Looking at Boeing, not necessarily an airline, but Expedia, they were buying strangles on American Airlines. That is a very tight looking chart. Disney I've talked about, SeaWorld I've talked about, Six Flags recently getting off to a great start. So we'll see. By the way, Disney boycott trending. You know what I've said about boycotts, how they can trick a lot of retail traders into shorting a stock because it just makes so much sense. They're going to lose lots of sales. They're going to lose, it's just like logic, man. What do they say? If we could convince everyone with logic, we wouldn't need to do any of this mystical crap. 52.10 is this low. So the 78.6% retracement is 59.38. That's very close to 59.66. 59.83 to 59.66. That's going to be the invalidation. And I'm looking for Carmax to begin a wave 3 from this low of a larger wave 3. So we'll see how this plays out, and then if this does happen, more confirmation is going to come if 66.42 and 67.44 are broken on the RSI. Let's look at some stocks that have very clear biases. That was, the first one was a married put. The second one was a strangle. That's kind of me using Elliott wave interpretation. But let's look at some ones that were very clear with what the bias was. By the way, Smith & Wesson brands, I've talked about this one recently. We're gonna look at what was this one I just opened? Lexicon Pharma. We're gonna look at. Let's just look at some of these that I've got here. How I do is I take the unusual options volume, I sort by the lowest put to call ratio, then I refresh, and then I sort it again by the highest 1 month volume. So this is going to be kind of the clearest bull biases. Lexicon Pharma is going to be one that we go over in this video. I've talked about Six Flags. I have a long position in Imperial Petroleum, another airline right there, Hawaiian Airlines. And let's look at some of these other stocks that I have on this. Audity Tech. Where did Audity Tech come from? I'm sure that I'll find it. Actually, was Audity Tech. This was on the strangle or the straddle screen briefly. I'll talk about Audity Tech. I really, have got to stop doing these where I pick the strangle and the straddle picks in the middle of the trading day, and then they're not on the screen. But I think that actually might be a good thing because I don't believe XPEV is going to appear on the straddle screen right now, but it was certainly on the screen during the day. So I think that sometimes the readings intraday can be useful too. CBC XPEV is not on here, so I believe I'm going to be rewarded for looking at this during the day. Lexicon Pharma, a very clear bias. I've talked about this one before. I'm going to diagram it pretty cleanly right now. The unusual options volume plus 1,000% clear bias to the bull side. It looks like they bought leaps. Yes, they bought their leaps for the two strike call for October. So October 18th, they're looking for a big swing to the upside in Lexicon Pharma. Surprise, surprise. It looks like they're doing Elliot wave. Nothing wrong with that. We're going to see Lexicon Pharma is going to form from this low a large wave one. And then if we connect the beginning of this wave one high with the beginning or the beginning of the wave one with the high of the wave one, we see that this 2-month time fib comes right here where a potential bottom could be. I expect that if wave 3 and wave C is in progress, it's going to be towards this daily 3 time fib right here. And let's see what that gets us. Does it happen to line up perfectly with their expiration? Not quite. August 7th, they gave themselves a little bit more time. I think the length of wave 1 placed at the wave 2 low is going to be hit for this wave 3. So subdividing this a little bit, this ABC correction, this connector wave is connected with an expanding flat. So that's why I'm going to make it a different color. We can almost see visually that this is down at the 78.6% retracement. So I'm looking for, it's a little tight. I'm looking for 1.48 to hold and for LCRX to begin a wave 3 and for these MMs to get paid out. 3.73. 0.92, right there at the 78.6% fib. Gorgeous, gorgeous, gorgeous. Congrats to the MMs in advance. Audity Tech. I think this was on a strangle or straddle screen, which is why I was like, I gotta look at this because I've honestly never heard of this stock and seen it on a super, liquidity screen like the straddle and strangle screen. I was like, okay, wait a minute, I gotta check this one out. And sure enough, wasn't hard to see why. What's this stock do? Prepackaged software. I've talked about other software stocks very recently. Audity Tech is a consumer tech company which builds and scales digital first brands to disrupt the offline dominated beauty and wellness industry. So consumer tech for the beauty and wellness stocks. It's a pretty big niche they're going for. It looks like, but it looks like they're gonna get rewarded fundamentally. And I'm gonna reach for this laptop charger right here. ABC from this high. When there's a clear ABC from an IPO high, sometimes I'll check the time fibs on that whole ABC correction. Boom, look at that. Oh man. So I'm expecting this rally to begin or continue. Even this is a daily chart. This stock hasn't been around a lot, but September of 2024 is looking like this is a very young stock. Okay, so this is Audity Tech. They survived their first rate hiking cycle, or I guess they didn't. They were in a pretty generous time in the market and they got wrecked. So we'll see. Subdividing this, it could be wave one, wave two from this low. That's probably accurate because wave three is usually visibly the biggest wave. 3, 4, 5, and then from this high, I think this is 1, 2, 3, 4, 5. Wave 1, wave A. This is an ABC correction that ends wave 2, wave B. So I'm looking for this classic 5, 3, 5 sequence to unfold. It's just very clean. Ooh. I'm getting hot and bothered looking at this. 46.11. $33.52. We're at the 61.8 to 78.6% fib. I'm not sure I needed to subdivide this, but or measure those fibs, but I will. And then from this low, it looks like we're unfolding into a nest, in my opinion. 33.52 is going to be the wide invalidation. That's a little too wide. I think 34.94 is better. Yeah, I don't think that's going to go. 33.52. Not too much further away, and that's the true invalidation. But the upside risk reward is clearly there for wave 3, even the small wave 3 up to 50. I'm looking for a subdivision like this. Oh man. Woo. Isn't this a beautiful chart? Gorgeous. Gorgeous. XPEV, it was on the straddle screen. Let's look at XPEV. I had a very big winning position on Li Auto that I took in 2021, and I had a position that was up pretty big for XPEV. I continued to hold it for the long haul, and then I've collected tons and tons of dividends from KLIP, which I've thought about blending with the Chinese Dragon ETF PGJ or PJ something, or of course Clip or KWeb, which is what it runs the buy right on. Looking at XPEV, they were buying the 7.5 straddle on this. We look at the time fibs, it looks like they're going to make money, but are they going to make money to the upside? If I connect the time fibs from this low to this high, notice that this 2-time fib right here, it's kind of this market symmetry principle, and the invalidation for XPEV is pretty clear. So always remember, high beta is going to be more of a stomach churn. Smart people are going to take smaller positions and kind of be a little more loose with the stops and the exposure. Very dumb people are going to not see any difference between Philip Morris and say BKKT crypto platform. Okay, so a lot of people aren't just ever going to get that, but the beta is here for XPEV, I believe it's going to hold above 6.18 and see wave 1, wave 2. I'm looking for a wave 3 for XPEV, even looking for it to go up towards January of 2025. So quite a big possible rotation into China. And I'm not going to try to be perfect with the rotation, but there was a time in the 2000s where China was going up pretty significantly, and the American stock market was not. A very similar theme with oil and gold. And surprise, surprise, a lot of those long-term charts are looking very good. I'm not going to, exactly say when there's going to be a massive rotation out of the S&P 500 or anything like that. But looking down the road, gold, silver, foreign markets, foreign exposure. We've kind of scoffed at getting exposure to these sectors for quite a bit, and looking at not just XPEV, but KWEB, a lot of these Chinese sectors, a lot of these international sectors. I've talked about Europe, even we're going to talk about Australia in this video, but it's really a lot of foreign markets. A lot of IEMG would be a great ETF to kind of exemplify this. So 36.19 was this high in this possible. It looks like I lost my fibs when I moved that. 36.19 and 17.22. We see that it looks like KWEB did end 1, 2, 3, 4, 5 wave 1, A, B, C wave 2 at the 61.8 to 78.6% fib. To 78.6% fib. So I think we're going to keep seeing it climb the right side of this base. I know it's getting a little strayed from XPEV talking about KWEB, not quite the exact same sector, but just kind of thematically of China. It might be the more high beta play on some large cap foreign market alpha that may not be there in Europe. It may not be there in, say, South Africa, but this is another example right here for QFIN. Very similar story, just trying to show a little more of China. AISP. Someone asked about Archer Aviation. I talked about Joby Aviation for a little bit. This was on the unusual options volume screen with a pretty clear bias to the bull side. Let's see if we can find those options right now. Yeah, it looks. Was it these? That doesn't seem like enough. Yeah, so they spread them out a little bit. This doesn't really. Yeah, there it goes. Okay, so it looks like they spread out these expirations pretty well. 2,570 and another 1,300, 1,700 calls. So not a bad amount of calls on this stock. It's probably a low floater. Yeah, we're gonna see shares outstanding. It's got 23 million shares outstanding. So low float stock. Airship AI Holdings. Wait a minute, this isn't an AI stock, is it? Good Lord, we can't have these They want us to have. Oh, okay, I get it. We need robot pilots, of course. AI Airship Holdings is an AI-driven video sensor and data management surveillance platform which provides complex automated monitoring, predictive event analysis, and intelligence to large institutions. Oh man. Let's see. Speaking of institutions, they're a profitable company, or a little bit. Earnings per share is negative. Nah, this is an interesting little accounting story they've got going on here. I say that because they've got negative return on equity, they've got negative earnings per share, but they've got extremely positive return on assets, interest coverage, and profit margins. So I'll need to check and make sure that's all accurate. But anyway, Airship AI Holdings, unusual options volume bias to the bull side. I think it's a pretty clean count. Someone asked about Archer Aviation. Will this be a high beta play or maybe a alpha winner in the the airline sector, if that ever gets going, American Airlines and Boeing. I think Boeing is looking like the cleanest Elliott wave count. Like I said, they were buying strangles on American Airlines. I think this low of 3.59 is not going to get broken, so that's going to be the invalidation. I'm looking for wave 3, wave C to begin, to continue until August at least. Wave 1, wave 2, wave 3. If stuff gets crazy, 16 might just be a bump. Could this one day be in the 20s? Oh my gosh, I can't believe I said that. But that would be the target for wave 5 if there was a large wave 3, a shallow wave 4 correction that retested the wave 1 high. In wave 5 was the length of wave 1, placed at the wave 4 low. The Aussie dollar. You guys don't care about my international stocks, I get it, but they've been doing pretty well. Some of these international ETFs look very clean. I talked about France recently, IEMG. I talked about China in this video. We're going to give it to the Aussies. Getting off to a good start right here. Perfect call. Again, with the unusual options volume. Very similar reading that I saw before, which prompted me to post about it. No likes. You guys don't care about the Aussie dollar? Oh, come on now. Get sophisticated for once in your life. Come on, this is history. 1, 2, wave 3, wave 4, and wave 5. A, B, C correction. So 1, 2, 3, 4, 5, 3, 5 is what I'm looking for. And then this is really nice. This correction is subdivided with an expanded flat. Wave A, this connector wave is connected with an expanded flat. A, B, C for wave B. And then wave C down here. From this low, wave 1, wave 2. I believe wave 3 of wave 3 is in progress. 61.33 is getting further away. We're going to see 3, 4, 5 develop for the Aussies. I mean, that's going to be quite the shakeup in the foreign exchange market. Also, doesn't this chart look very similar to a lot of the growth stocks? 2021 high, late 2021, late 2022 low. Consolidating wave 1, wave 2, staying sideways for most of 2023, looking like it's getting ready to break out late 2024. Anyway, one of my golden rules is do not ever do any type of correlation analysis with foreign currencies. Scott's Miracle-Gro, it wasn't on the screen today, but I did talk about how there was unusual options volume being bought on Scott's Miracle-Gro, and it was expiring for June 21st. So I think that's going to come into play. Again, I think this is a pretty clean chart. And we're going to see. I wanted to get some commodities in here. Scott's Miracle-Gro, super cycle low. Really important. Really important. Time in this chart's life. If I really cared about people with my worldview, I'd want to find a way to get them to look at this chart somehow. I wonder how I would do that. I'm looking for it to hold above 58.68. And that's a little tight. 53.43 is the proper wider invalidation. I could keep subdividing this for a little bit. And I might. Got a little 2 up there on the chart. Oh no. So I'm looking for wave 1, wave 2, and then from this low in small black, wave 1, wave 2, large wave 3 is in progress before a shallow wave 4 and a wave 5 higher. So this cycle is 1, 2, a large wave 3 in progress, shallow wave 4, and a wave 5 higher. Those 5 waves are going to complete wave 3 on this larger degree. So the biggest cycle starts right here. Wave 1, wave 2, this large wave 3 is in progress. It's subdivided into 1, 2, the widest invalidation is 53.43, 58.68 is a little tight, probably too tight. I think this is a wave 1 and a wave 2 as well. Wave 3 up to the 161.8% extension is 93.10. before a shallow wave 4 and a wave 5 higher. Wave 4 retests the wave 1 high. Wave 5 is the length of wave 1 placed at the wave 4 low. We can see that another high is made. Those 1, 2, 3, 4, 5 waves up would complete this black wave 3 before a shallow wave 4 and a wave 5 higher. Those 1, 2, 3, 4, 5 waves in small black would complete a large wave 3 in this big black sequence that begins in October of 2022.